So, as we have seen the last 8-10 months, because of this pandemic, there are a lot of disruptions happening, and there are basis or consequent to that, there are a lot of measures which have been announced by governments across the globe. There are measures which are relating to tax, fiscal, or for economy as a whole. Again, when it comes to tax, yes, there are a lot of considerations. Given few of the countries have changed the definition of residency for particularly for this year. There are provisions relating to transfer pricing which have been amended across the globe. With this backdrop, OECD also has provided its guidance on the TP implications for on account of COVID-19 pandemic. Before starting the session or deliberating on what exactly are the guidance note, would like to acknowledge the efforts of Gracelyn for preparing this PPT. The legends used in the presentation: A is associated enterprise, ALP arm's length principle, APA advanced pricing agreement, CPM cost plus method, MAP mutual agreement procedure, PP personal protective equipment, RPM resale price method, TNMM transaction net margin method, TP transfer transfer pricing. So schema for the evening: overview, comparability analysis, allocation of losses, government assistance, advanced pricing agreements, and the way forward. So let's start with, overview. Yes, as I said, because of this COVID, there are a lot of disruptions. There are disputes in MAP as well. There is mutual agreement procedures, and also how to do a transfer pricing study when it comes to TP laws, and because of the effect the pandemic which has created. So we'll figure more on the comparability issues, the issues relating to APAs and maps, and other possible issues. What are the rather, I would not say solutions, but what are the guidance prepared by given by OECD for those issues? Firstly, focusing on the comparability analysis, which is again the backbone for any transfer pricing study. Pricing of some transactions between independent may reduce the reliance that can be placed on historical data when performing comparability analysis. This may require taxpayers and tax administration to consider practical approaches that can be adopted. It should be noted that such challenges may vary depending on the impact of pandemic on the economically relevant characteristics. So again, what kind of impact the pandemic has had on that particular economy, that needs to be considered while doing a comparability analysis in a transfer pricing study. Sources which support comparability analysis: analysis of changes in sales volume, change in capacity utilization, incremental or exceptional cost borne by parties involved, quantifying the effect of government assistance, government interventions that have affected the pricing, interim financial statements, macroeconomic information, statistical methods, internal budgeted or forecasted data, analysis of impact in previous recessionary periods. So these are the various factors which needs to be considered while doing a comparable analysis, particularly in these kind of pandemic hit situations. What are the various considerations in setting transfer pricing? First is use of budgeted information. So detailed pre and post COVID profit and loss analysis needs to be done. Adjusted profitability if COVID has not occurred, so that needs to be considered. Rationale for increased allocation of cost or reduction in sales to the tested party. Quantification of government assistance would aid. These are the factors which would aid to evaluate the factors that may impact the arm's length price or arm's length principle. Timing issues, delayed availability of contemporaneous information. Obviously, because of this pandemic, entities were able to finalize their accounts a bit delayed. If they are able to finalize it in a delayed fashion, they'll upload in various databases and all in a delayed fashion. So the data for the purpose of doing benchmarking the transfer pricing, that would be available lately. So this would there would be some timing issues. Utilization of data from other crises. It would be better to base comparability analysis on actual economic circumstances, because the comparability analysis that is solely based on financial information from the global financial crisis 2008-2009 would raise significant concerns. So at the time of the global recession happened, which happened in 2008-9, what were the considerations given, or what were the various factors which were considered at that moment. Same can be replicated, because this is kind of, I would not say similar situation, but yes, the disruptions which it has created are again more or less similar to what it created in 2008-9. The global recession happened. Period of data. So again, continuing with the considerations, the period of data. In order to identify when the pandemic effects were material, it would be appropriate to have separate testing periods with necessary adjustments. Fifth, existing set of comparables. It is necessary to review the suitability of existing comparables, and in some cases, the set has to be revised using updated search criteria. Loss-making comparables. Again, there is a tendency from the department to exclude loss-making comparable companies, but they may have some uh, importance when it comes to this year, when a transfer pricing study would be done after March 2021. How to handle information deficiencies. So tax authorities should allow the use of reasonable commercial judgment supplemented by documentation, so that cushion should be available to the taxpayer. Tax administration should further provide flexibility to allow amendments to financial year 2020 tax returns. Jurisdictions can also allow for price adjustment mechanism, the application of more than one transfer pricing method. So here again, across, I think so, across the globe, only one method is used, or is what is even asked by the department to use it for the purpose of doing a transfer pricing study. So more than one TP method can be an option in case there are information deficiencies. So these are the issues and the considerations for the purpose of comparability analysis. Second most important thing is losses and allocations of COVID-19 specific costs. So what should happen, or what exactly is the issue in this scenario? What are the possible solutions? Allocations of losses in the context of pandemic. Allocations of risk between parties to an arrangement affects how profits or losses resulting from the transactions are allocated at arm's length through the pricing of transactions. Further, again, it would be necessary to consider how exceptional non-recurring operating costs arising as a result of COVID-19 should be allocated between associated parties. The pandemic has created conditions in which associated parties may consider whether they have the option to apply force majeure clause, revoke, or otherwise revise their intercompany agreements. So these would be typical scenarios in this situation, wherein like allocation of losses will happen. What exactly is the issues involved in allocation of loss, and what are the plausible solutions? Allocation of losses to limited risk entity. So in a transfer pricing, whichever entity is a limited risk entity who is bearing less risk, how to allocate losses in that scenario? If such an entity assumes the risk in the COVID scenario, then losses can be allocated. Consideration should be given to the commercial rationale for any purported change in the risk assumed. So, based on commercial rational, losses can be allocated to limited risk entity. Modifications of new intercompany agreements, determining whether a renegotiation represents the best interest of a party to a transaction. Careful consideration of the options realistically available and the long-run effects on the profit potential of the parties. The accurate delineation of the control transaction. Again, I've been repeating this. What is the meaning? Assessing how the actual behavior of the parties to transactions stacks up against what is provided in the written contract. Lastly, care should also be taken to assess whether the magnitude of disruption caused by COVID-19 in the specific related party situation qualifies as a force majeure event. Continuing with the issues and possible solutions in case of allocation of losses. Allocation of operational and exceptional losses such as expenditure of PPE, that is the equipment for the purpose of as a safeguard measure against COVID, reconfiguration of workspaces, etc. So these would be like the exceptional cost which an entity would be incurring during these times. So whether these should be considered as exceptional items, or for this particular year it should be considered as a normal thing or an operational thing. Again, OECD says that risk assumption. So assumption of risk should be considered while taking this decision whether to consider these expenditure as operational or exceptional. In some cases, party initially incurring These exceptions may not be the party assuming risk, and consequently, such costs may need to be passed on to the parties that do assume risk. So, as it is said, as I said, friends, the parties who are assuming risk should consider these costs as the operational cost. Party who is not assuming risk or having limited risk in a transaction should not consider these expenditure as operational. They should consider this as exceptional and pass it on this cost to the parties who are actually engaging with risks. Consideration of exceptional costs and comparability analysis. Firstly, exceptional costs should generally be excluded from the net profit indicator. Secondly, including exception in the cost basis would transfer these costs to the counterparty, whereas excluding them would have the effect of allocating them to the tested party. Thirdly, adjustments for accounting concerns may be required to improve comparability. Example, the recognition of purchase of PP as an operating cost by the tested party and as a cost of goods sold by a comparable may have significant impact when computing a profit level indicator based on GP and may require a comparability adjustment. So as I said, friends, our party or the tested party in our scenario, we are considering purchase of PPE as an operating cost, but that may not be included as an operation cost, but that would be considered the cost of goods sold. So one may consider this as an indirect cost, and another may consider the direct cost. So that way there would be disparity, wherein again comparability adjustment should be done to achieve parity and then do a comparison, a proper comparison. Government assistance programs. So as I said in the starting, friends, government has provided a lot of assistance or measures or reliefs. So what happens in transferring when this government assistance is being provided? Is a monetary government assistance a monetary or non-monetary program wherein direct or indirect economic benefit is provided. TP implications include whether the government assistance is provided to a member of an M&E group directly, which has affected the behavior of enterprise engaged in potentially comparable transactions. In addition, there may be challenges in establishing the nature of government assistance received by potential comparables. So, because of government assistance being provided, whether there is any a change in the behavior, rather significant impact on the pricing of the transaction. If that is the case, then yes, that has to be considered. Ascertaining nature of assistance, the extent to which the receipt of government is economically relevant characteristics may vary, and if the same is affirmative, such information should be included as a part of documentation to support the transfer pricing analysis. An example of where government assistance may be more economically relevant is the provision of wage subsidy, a government debt guarantee, or a short-term liquidity support. The analysis of the receipt of government as a local market feature may help to inform an analysis of whether its receipt affects the price of a controlled transaction. However, the particular nature of the government assistance should always be reviewed in the transfer pricing analysis, as under certain circumstances it may not be a great feature of the market and or it may not generate benefits of either party. Effect on control transactions. The potential effect on the receipt of government assistance on the pricing of control transaction will depend on the economically relevant characteristics of the transaction. Broadly, analyzing such an impact would involve evaluation of how the M&E group responds to the receipt of government assistance. Such an analysis will take into account the allocation of economically significant risk under the accurate delineation of control transaction, the impact of the pandemic on the outcome, and the linkage between the type of government assistance and those risks. Another aspect which needs to be considered, the provision of government assistance to an associated party which will not change the allocation of risk. So if there is no change in the allocation of risk because of the provision of government assistance, that may not have any impact on the transfer pricing study. Impact of government assistance on comparability analysis, degree of economic relevance, duration of the assistance program, and the relation between the assistance provided and the pandemic related cost or the lost revenue. These are the following factors which needs to be considered for the purpose of comparability analysis when it comes to government assistance. Also, where accounting treatments of the same type of assistance differ between tested party and the comparable, a comparability adjustment needs to be done. Lastly, accounting treatment of a conditional loan may differ from that of an outright grant. So, in addition to above, divergence in the accounting treatment. So, again, if there are any discrepancy or differences in accounting treatment, that needs to be considered while doing the comparability analysis. advanced pricing agreements. So as I said, friends, there will be again changes or on what factors or on what conditions or on what assumptions the APAs were introduced that may require a change. But when to change, when to go for that change, when not, let us see. Incidence of material changes in economic conditions that were not anticipated when many APAs covering FY 2020 and potentially future financial years affected by COVID-19 were agreed. Application of existing APAs if there is a breach of a critical assumption. If yes, then yes, there needs to be change in APA. But if there is no such, because of this COVID-19, there is no breach of any critical assumption, then existing APA should be maintained and upheld. Response of tax administration. In some situations, the APA agreement and domestic law or procedural provisions may prescribe procedures to follow. In the absence of same, a breach of critical assumption with the APA could have three potential outcomes as follow. Revision. First, existing APA would apply except that different terms apply before and after the revision date. When it would be appropriate, there is a material change in conditions noted in the critical assumptions in the APA. Taxpayer and tax administration agree on how to revise the APA. Revisions could be specific or general. Cancellation. APA is effective up to the cancellation date and not for the whole of the proposed period. Where it would be appropriate, where there is a material breach in the APA critical assumptions, or taxpayer fail to materially comply with any term of condition of the APA because of COVID, then and also where cancellation cannot be automatic. These would be the three appropriate situations where cancellation will have effect. Revocation. Taxpayer is treated as if the APA had never entered into. When this would be appropriate, where there is a misrepresentation, mistake, or omission, taxpayer has failed to materially comply with the fundamental term or condition of the APA. Again, in the current scenario, revocation should be limited to situations where the above actions meet the standard for revocation, regardless of whether such actions arose because of the pandemic. Adequate supporting documentation to approach for revision of existing APA, a description of the narrowest relevant taxpayer business segment tracked by management that encompasses the entities and cover transactions involved in the APA, forecast and actual business segment profits for the financial years ending with or within financial years affected by COVID-19. So these are the various documentation. Thirdly is any proposed or implemented modifications to pre-existing agreements, a narrative explaining the anticipated effects of the current economic conditions, a detailed P&L with the breakdown of COGS and selling, general and administrative, exceptional operating costs, other non-interest expenses, and income from government assistance program, information about the third party behavior. Solutions for APAs under negotiation. If APA is in the process of negotiation covering financial 2020, conclude a short period APA, so covering the period affected by COVID-19 pandemic, and a separate APA covering the post-COVID period. Extend the period of APA on a condition that retrospective amendments would be made if appropriate. Conclude the APA for the whole period to mitigate the short-term effect of the pandemic, depending on the magnitude and the length of such effect. Cumulative or term test throughout the APA period, evaluating the results or transferring methodology specified by APA over the period of APA rather than on an annual basis. Other challenges arising due to restrictions on domestic and international travel, etc., can be mitigated by technological solutions that are available to complement additional methods of communication in the process of negotiating APAs. So these were some of the thoughts, friends. Way forward, yes, as I said, friends, because of COVID, OECD has encompassed principle that are established in the base document TP guidelines for many enterprises. Given the fact that each business structure assumes distinct challenges in the aspect of pricing of international transactions, the complexities involved on account of a pandemic could also be specific rather than generic. So these were the high level thoughts or rather guidance given by OECD on a high level note, as the challenges faced by enterprises would differ from enterprise to enterprise. So accordingly, everyone will have a different impact Accordingly, there will be distinct challenges. Accordingly, there will be different type of benefits for a few of the enterprises on account of government assistance programs. So it at the end, OECD says a case-by-case approach would be better rather than a wholesome one. However, the underlying principle in transfer pricing should be accurate delineation of the covered transaction with proper allocation of risk assumed and thereby arriving at the current arm's length price. So whatever approach you have because of this pandemic, you have to just ensure three things. The arm's length principle is justified, the entity who is assuming more risk has more rewards and not the vice versa, and there is accurate delineation of the transactions which are covered for the purpose of TP. If this is being ensured, yes, that OECD says would be a better approach rather than going on a generic note. So these were some of our thoughts, friends, on OECD's guidance on TP during COVID-19 pandemic. Any questions would be happy to answer. Thank you, friends. Have a great evening ahead.